About 2 weeks ago, a battle was fought between the two giants of the crypto world. FTX, one of the largest crypto exchanges in the world, lost, and lost spectacularly. We will discuss how and why right now. What happens if you use one of your companies to boost the value of your second company by investing money into it? Naturally, the price of the second company will grow and become more valuable. On the surface, it's a brilliant idea to use one company and make the second one grow. The problem is that if and when people learn about this, things are going to go downhill very quickly, especially if the thing you invest in is a currency, since every currency is dependent on people believing it has value. This is not a great strategy, even without the fact that your competitor owns 20% of your crypto exchange. This is a simple and short explanation. Now, let's get to the specifics. FTX is a cryptocurrency exchange. It's like a normal currency exchange, but with crypto. FTX also has its cryptocurrency named FTT, which is used to navigate the FTX exchange. You can use the FTT token to easily buy and sell other cryptocurrencies through the FTX exchange, which seemingly gives it some real-world utility. That's a good thing. At its height, it had over 1 million users and was the third largest exchange by value. What could possibly go wrong? Well, a lot of things. The leak and the punch. On the 2nd of November, CoinDesk, a reputable news site in the crypto space, published a report about FTX. In the leak, we found out that Alameda Research, a trading firm, had invested more than half of its funds into FTX's cryptocurrency. A trading firm usually does one thing. It takes money from people who want to invest in stocks or cryptocurrencies and invests that money. Alameda Research made the first mistake when it invested half of its funds into the FTT coin. Normally, this wouldn't be a problem if it wasn't for the fact that Alameda Research and FTX are connected by one man, their founder, Sam Bankman-Fried. If an independent company invested that much into FTX, that would be great and would mean that FTX is valuable, at least to them. And since they are a company trying to make money by investing in things that go up in value, that would be perfect for a crypto exchange like FTX. But Alameda Research and FTX were connected, and this simple fact turned everything upside down. In short, FTX got tons of investment, and its value grew with Alameda Research's help. After CoinDesk's report made this known to the world, it took just 4 days for its competitor to make a move. Changpeng Zhao, the CEO of Binance, made his plans known on Twitter. He was planning to sell all of Binance's FTT coins. Back in 2020, Binance bought 20% of FTT coins. I think you can easily guess what happens to a cryptocurrency when one of its biggest investors decides to sell all of its assets. If FTT had a high trading volume, this problem would not be that much of a big deal. That was not the case. The price fell and fell hard. This is what made things go from bad to worse for FTX and Alameda Research. The bank run. A bank run is a situation when people start taking out their money from the bank. Banks generally don't have all the money in cash, and they physically can't give away all the money to everybody who asks all at once. This is what happened to FTX since Binance's CEO made it known that he was going to sell all of Binance's FTT coins. People started liquidating their FTT coins, which made the price go down, which in turn forced more people to sell their FTT and so on and so forth. Before November 6th, the price of FTT was sitting comfortably at $25-ish. Just 2 days after that, the price started falling, and as of writing this video, a single FTT coin is worth less than $2. It's hard to imagine that just 1 year and 1 month ago, the price almost reached $80. In a matter of days, billions of dollars worth of FTT coins were sold. The price hitting the floor didn't help Alameda Research one bit. Remember, they reportedly invested more than half of their assets into the FTT coin, which, by the way, was explicitly forbidden in their terms of service. Now, not only FTX was in trouble, but Alameda Research was as well. Very soon after the FTT crash, Alameda Research announced that they were filing for Chapter 11 bankruptcy. But for a moment, there was a visible savior in sight. The death blow. Shortly after Binance's CEO announced his plans to liquidate Binance's FTT coins, the CEO of Alameda Research offered him to buy Binance's shares for $22 per FTT. This did not happen. What happened instead was that on November 8th, Binance CEO and FTX signed a letter of intent for Binance to buy FTX. As of writing this video, the deal has not been completed. In fact, Binance's CEO announced that this acquisition is not going to happen. And when this happened, the price crashed even more than before, because the last thread of hope FTT holders might have had was cut. When FTX's collapse was evident, the Royal Bahamas police force began a criminal investigation into the company. On November 14th, the United States also launched an investigation. To say it as bluntly as possible, this is the end of FTX, at least for the foreseeable future. Sam Bankman-Fried. The co-founder of both Alameda Research and FTX, Sam Bankman-Fried, was worth over $10 billion according to Forbes' billionaire list. That was 2 weeks ago. Right now, SBF is worth around $1 billion. It seems that most of his investments were also in FTT. But at least now, it makes sense that neither the founder nor the company itself diversified their portfolios. And this is probably the first lesson you learn when you learn about investing. Don't put all of your eggs into one basket. Simple, brilliant, and yet somehow hard to follow for a billionaire and a multi-billion-dollar company. The fallout. It's needless to say that FTX's bankruptcy had a massive impact on the crypto world. It will take some time before the policymakers get their hands on some regulatory powers thanks to this event. Before that happens, the fallout is already tremendous in other areas. For example, Solana, a protocol designed for the creation of DeFi-focused apps, has been falling since FTX filed for bankruptcy. Sam Bankman-Fried has endorsed Solana a lot in the past. Just a year ago, much like FTT, Solana was also reaching its peak. More than $10 billion were stored in the Solana network. As of earlier this month, that number was gradually reduced to $1 billion. Pretty bad, but still normal considering the crypto winter we are in right now. As of today, that same figure is around $300 million. Yes, in a matter of days, Solana lost more than $700 million from all of its applications. While Solana is a good example with a clear connection to the FTX bankruptcy, many other cryptocurrencies are also suffering. Bitcoin, Ether, Doge, and many more popular cryptocurrencies are down following these events. Not all of that might be FTX's fault, but it can be said with certainty that its bankruptcy did have an impact on the general direction of the crypto market. A layman's perspective. From a layman's perspective, this is a disaster. Many normal people lost a lot of money. Normal people who were trying to make a little bit of money. Who knows how many people lost their savings? As a crypto exchange, FTX gave you the option to buy different cryptocurrencies and keep them on the exchange instead of sending them to your wallet. Most people who decided to do this and weren't quick enough to get the money out as soon as they realized what was going on definitely lost money. And everybody else who held the FTT token also lost money, though not all of it. This is not good for the crypto world. The fallout, which we touched on for a little bit, will grow and multiply in the coming weeks and months. Nothing can be said with certainty, except for the fact that many people who are interested in cryptocurrencies will be scared away by these events. On top of that, if different governments, and especially the USA, weren't already trying to find a way to regulate the crypto market, FTX's bankruptcy will surely be a good incentive for them to act, and act quickly. This is why it's extremely important for people to constantly learn more about cryptocurrencies and investing in general. And this is exactly what this channel will be focused on. Giving you news, breakdowns, and good lessons is what we do. As a crypto enthusiast, it's extremely important to have your mind open to new ideas and opportunities. But you should not open your mind too much because your brain might fall from it. After all, this is exactly what happened to Sam Bankman-Fried when he thought he could do anything. Thank you for watching this video. Consider subscribing and clicking the like button if you liked it.